Good morning from Los Angeles. Welcome to the Red Hat Day. Welcome to Power Hour with Sergio. It is bloody red today. We'll talk a little bit about the Fed cut, why the market's not buying, and especially the bond market. I'll talk a little bit about Fed rate cutting cycles and what the market has done, unlike a lot of people on YouTube and X. Although the title of the video today or the live stream today is "Don't Fight the Fed?" ? What happens during rate cutting cycles? You guys should go check it out. Gemini it, Google it, whatever you want to do it. There's some important charts out there. In fact, there's a video on the channel about that when they cut the rates last time. Why the bond market is not buying what the Fed is selling or the administration is selling at the moment anyway. And then we'll go through some charts. Oh, let me put the link up if anybody wants to come on. I have about an hour plus today. Here's the link. And there it is. So if you guys want to come on, grab the link. Make sure you're in a quiet place with a good internet reception so we don't get cut off. So yeah, good morning. Welcome to Trading with Sergio. Mondays and Wednesdays, Power Hour with Sergio on Fridays, 10 a.m. Pacific, 1 p.m. Eastern. And yesterday, the market kind of behaved in a way that most expect, I guess, after a rate cut. Today, I think the sell-off is more not because of what's happening with the rates, but I think what happened with Avago and a lot of the chip stocks. Looks like, according to Chopsticks, we may be putting in a double top. The other part of the live stream headline is crypto bottoming or the next leg down. We'll go through some charts and give you guys my opinion. Again, it's just an opinion. None of this is trading, financial, or investment advice. I'll go through my long-term port, which is actually doing better than my trading account this year at the moment. Well, at the moment, there's only 10 days left. So that goes to show, if you're actively trading, how difficult it is to... They're both beating the benchmark by 2.5x, but actually my investment account is beating it by almost 3.5x. But trading is not easy, folks. It's not as easy as some of these gurus on X make it out to be. Yeah, just sell puts, everything will be fine. I'm like, I don't know. I mean, look at today, right? We have a little bit of a sell-off, and a lot of these high beta names are absolutely getting smoked. And although they have rallied from their lows, they're nowhere near all-time highs, while the market's about 1.5%-ish, 2% from all-time high. They're all down 20, 30, 40%, some cases 50% already. So what will happen if we were to get a 10% sell-off here on the indexes? What will happen to these high beta names with practically no earnings? Forget no earnings. Some of them have no revenue. So they'll get hit some more. But yeah, so look, I'm positioned. My positions have not changed actually for the last 2 weeks. I haven't added anything. I'm bleeding a little bit. I have some options expiring next Friday. Some puts, some naked puts, some cover calls. As much as I don't like cover calls in these cases, I think it's completely necessary, especially on a weekly basis. And when I go through the positions, I'll explain it, but there isn't much really to explain. Either you get called away or you just keep selling calls. On this particular situation, it's valid because the premiums are extremely, extremely healthy. And since my entry price on, they're talking about BMNU, which is the 2x ETF of BMNR, since my entry price is single digits, it makes kind of sense that in 3 months you can lower the cost basis. But then if you're dealing with an Oracle, if you're dealing with a lot of these, like Avago, let's say, today down $40, $50, what's happening to your cash grab with those puts that you sold, or even if you had sold calls, how much protection is it going to give you? So there's a time and space for everything. My goal on this channel is, look, a lot of people trade without having a full toolbox. So I compare trading to being a carpenter. You have to have a full toolbox. If you don't have one, and you're just doing the basic options 101, yeah, sell puts and then get a sign, sell calls. Okay, great, yeah. But there's so many other things that you can do. What's going to happen on an extended down leg in the markets? How are you going to use options to protect yourself, if nothing, hedge? A lot of that is not talked. It's all I hear is, yeah, sell puts, sell puts, sell puts. Sell puts is great. Well, okay. I mean, today we have Avago, so, or if you sold puts on socks or socks, what are you going to do now? Right? Because everybody is so used to having a couple days down, mean reversion, and then new all-time highs. Okay. What happens is that all the put premium that you collected over a year with one swoop will be disappearing because you will get so deep in the money so quickly that there is no really, a way to save your butt. So, let's just snap back to Wednesday. Fed cut the rates again. We'll go through TLT. So I said this many times, Fed can only control the short end of the curve. What is happening, for example, today to the long end? 30 years almost at 5%. That means no lower mortgage rates, right? And Fed can cut all the rates they want. Now, what they can do, they also announced on Wednesday that they may be buying short-term bills and up to 3-year notes, 40 billion a month. A lot of people interpret that as QE light or son of QE. I kind of agree with QE light, but why are they doing it is the question. Why is the Fed cutting rates when all asset classes are at near or at all-time highs? Why are they doing it? Right? Are they seeing trouble ahead? Are they seeing a slowing economy? But if you did listen to Powell's news conference, he said GDP is going to be fine, unemployment is fine, inflation is great. Same thing, basically, he's been saying for the last year. I don't buy it. I'm not buying a word. Market has not priced in, forget the R word, market has not priced in even a minor slowdown yet. And rates are being cut aggressively to a point. I mean, there's 2-3 more happening next year, probably. The only thing that I see as a positive, well, not totally positive, I don't think Fed losing its independence is a positive thing, if you thought they were independent, which I did. Now Fed is going to be controlled by the White House with the new Fed chief and governors coming in. One phone call away from QE. Okay, well, there is proof that QE over markets behave very well over 12-month period if QE is introduced. Yes, short term we could have some, trouble, but QE does help the markets. What is QE? Well, they're easing, they're buying bonds, they're introduced, they're going to print more because of our broken fiscal policy. They have to print more. That's a totally different subject, but it's kind of relevant because monetary policy follows fiscal policy. Well, our fiscal policy is not going to change. It's pretty obvious. So that's a given. Print and spend has to happen because we're going to run deficits for as long as I can see, and then we're going to increase the national debt. Okay. Well, QE is definitely a positive for asset classes. There's no arguing that. And while all asset classes, all gold, obviously, and stock market and everything else is almost at all-time highs, why is QE necessary? Well, is the Fed seeing trouble ahead? Is that why they're lowering rates? They're definitely not lowering rates because the Trump administration is telling the Fed to do so. Although, starting next year, because I just put a video out on Wednesday saying that White House equals the Fed now. They're going to have total control of the Fed. Once they have total control of the Fed, they can do whatever they want. Again, though, they cannot mess with the long end of the curve. They can always do short-term stuff. And when we look at the chart of TLT, when we look at what's happening in Japan, and today I have a canary in the coal mine video coming out explaining fully what's going on and what the potential is if there is a carry trade problem, part 2, like we experienced last August, could happen. It definitely could, but I think today's sell-off is mostly coming, from Avago, and Avago being part of the AI group, obviously. Market did not like that. All the chip stocks are getting sold heavily. NVIDIA is getting sold, and so we did have this problem, or not problem, but we have talked that this AI boom is nothing but a boom, and it's going to come to an end, and CapEx spending is out of control. Is the ROI or the cash flows generated from all this AI buildup going to support this CapEx? Well, look at Oracle stock, okay? Oracle CDSs, credit default swaps, they're called, are going absolutely through the roof, have been going through the roof. So their earnings came out yesterday. Stock got a haircut of 10%. This is Oracle, folks. We're not talking about Uncle Bob's, software company here. We're talking Oracle, okay? Stock with the AI circle jerk was at 350 not even 6 months ago, actually 3 months ago, when they announced that massive deal with OpenAI. So OpenAI is maybe potentially going to become the poster child of failure of AI. I don't know. But Oracle has gotten cut in exactly in half now in less than 3 months. Since actually 3 months ago, earnings came out, it gapped up from 280 to 350. These are hundreds of billions of dollars of market cap we're talking about here, okay? And now we're down to 180, down another 5% today, because yesterday's earnings were okay, but they don't have any cash, and they have a lot of debt that they build up to accommodate this CapEx, AI data center buildups. And even if they do successfully manage to build up, is the market large enough? Because there are a lot of other players outside OpenAI, right? We have Grok, we have part of XAI, we have Gemini, which I'm heavily using now. We have, enterprise side of it. We have Anthropic and Claude, and we have many companies competing in this. I don't think it's going to be first to market will win the race. I think we will have many different AI companies serving different needs, enterprise side, consumer side, things like that. But somebody is going to take the lead in all of this, and we'll see where the race is going to end up. But then, is all this CapEx spending into the trillions of dollars will be supported with the income or with the revenue AI is going to bring in? A lot of people say it is, because it's they say to me, don't just look at the retail side of things, right? There's going to be much different way of using AI other than ChatGPT, which I agree. ChatGPT is what we all use and know, or Gemini, to write an email or enter an email or whatever. But then obviously that's just, $20 a month you pay, and then, well, $20 a month, I don't know, times 1 billion people on the planet, 2 billion people on the planet use it. Okay, well, is that enough revenue, 20, 40, 50 billion dollars a year, to support all this trillions of dollars in CapEx going into data centers? We're going to find out. Well, market sensing all of this, I can tell. And the other thing market sensing is, at some point, market's going to pay attention to why are interest rates being pushed down in the U.S.? Because the last time I checked, if you look at the history of interest rate cuts in the U.S., the market actually does not do well. A lot of people are expecting, like I said, don't fight the Fed, market to melt up. I don't think we're going to get that. Actually, on Wednesday, the Trading with Sergio live streams headline was no Santa rally this year, and it's pretty obvious we're not getting one. The other thing is that if you guys can just read the tea leaves, The market actually has been stagnant for the past like 2-3 weeks. That's when Japanese interest rates were shooting up, and there is no more carry trade possibility. There certainly is an unwind possibility, and if that happens, that's going to be quick and ugly like it was last August. So does this help all of you to day trade? No, absolutely not. If you're day trading, you're day trading. Does it help swing position trade to a point? Does it help on long-term investments? I don't pay too much attention to too much macro. I try to buy companies and hold them, for at least a year and a day to take advantage of long-term capital gain tax structure in the U.S. And I got lucky this year, or good, or whatever you want to call it. I got into a couple of really good stocks when the April tariff musical chairs was getting played, and great. So I'm keeping my powder dry. Today's big move down is definitely a shot across the bow, but again, we're only 2% from all-time highs, right? Monday market could go make an all-time high. The thing with all of this is understand your risk, first of all, okay? If you don't understand risk and you're selling puts on high beta stocks, my first rule of thumb is if I'm selling a put on something, I'm not against selling puts. I'm all for it. I'm not against selling premium. I'm a seller mostly. Is this, are you willing to own shares of that underlying? If you're not willing to own shares, and a lot of brokerages, by the way, obviously sell puts, you have option level 3 and you're in a margin account. A lot of people sell puts because the requirements to sell puts are so low. In most cases, they are. And the way the brokerages calculate that is 20% of the underlying plus or minus the out of the money or in the money amount plus the premium. That's the requirement, period. Well, that's not the requirement. Unless you have a cash account and you're selling cash secured puts, then they put aside the amount that you're going to be using to buy the shares. That's a different story. If you have a cash account, no problem. But if you have a margin account and you're selling puts and leveraging it up, your requirement doesn't equal the share purchase amount that you may be facing once you get assigned. So people, please be careful about that, right? So I don't think a lot of people understand the risks of all of this. And when they don't understand it, and then they're dealing with these super high beta stocks, 3, 4, 5 beta stocks, and then when the market goes down 1%, stock goes down 5%, they're like, wait a minute, what's happening? Well, yeah, that's exactly what's going to happen. So I'm really concerned that people are taking exorbitant amount of risk without understanding the risk. Once they understand the risk, all power to you. Do whatever you need to do. So I did a quick day trade today. I don't day trade, but just to show the group that, I once in a while do crazy stuff. I bought a call debit spread. Literally, we were at 68.10 on SPX. Got out, made some lunch money. I'm definitely, actually, I may be doing some. I'm definitely thinking of buying some puts actually on the indexes. I think my concern is if the market starts sniffing a slowdown is not priced in. Recession, definitely not priced in. And we shouldn't be getting a recession. We're cutting rate. We shouldn't even be talking about it. And but I can see a decent pullback here, especially the first couple of months of the year. And then the takeover of the Fed happens by the White House, and then the printers get turned on because we have midterm elections coming up. And the Trump administration cannot lose those midterm elections. If they lose those midterm elections, it's over. Then we're just going to be tied up. Nothing is going to be done. 2 more years of nothing. So I think that's what the Trump administration is trying to do. Take over the Fed, turn on the faucet, get on the helicopters and dump some money and pump the economy, pump the stock market. Because it will happen. If they do that, then that will happen. But lower interest rates are not coming your way, folks. If you're trying to buy a house, mortgage rates are as high as it's ever been. If you're trying to buy a car loan rates are as high as they have been because the proof is in the pudding. Look at the 10-year note. 10-year bond. Look at the 20-year bond. Look at the 30-year bond. They're not going down. They're in fact going up. In fact, I'll show you guys that with the TLT chart. So Fed cutting the rates may not help the consumer if the long end doesn't behave, because mortgages and car loans are not underwritten by the 3-month T-bill or a 6-month T-bill. The 2-year note, 5-year note, 10-year bond, 20-year bond is what you watch, and those rates are going up while the short end is being pushed down. So I don't know. We'll see. We'll see where all this is going to end up. So good morning to everyone. Let's see. Good afternoon, brother. Good afternoon, Octu, Traveler, Bug Eyes. I usually keep things long term. Yeah, I mean, look, I call it, one is business. Business is investing, creating long-term wealth, which works. It's proven. Power of compounding, obviously. And then the other one is funny money trading. I mean, everybody has a different size account. Trading is fun, obviously, and we all want to make more money. But if you are trading, I said this before, and if your returns on a yearly basis are now beating the benchmarks by 3x, you should not be trading. Why is that? Well, first of all, tax structure of short-term capital gains, because pretty much everyone, unless you're doing leaps and going out a year and one day, pretty much everyone trades, sells options 30, 40 days out. That's all short-term trading. Short-term trading taxes are according to your ordinary income tax rate. So if you take out the taxes, if you take out slippage, if you take out commissions, how much money is left over, right? I mean, look, the S&P 500 this year is up 14%. You could have earned 14% on your money without doing any of this stuff. So what I'm saying is, if you're not at 30%, 35% in your trading account for the year, then you're just basically spinning wheels with much less risk. I'm not saying risk-free. There's nothing risk-free, which much less risk. You can be in an index fund and get your 14%. The last 2 years, 3 years, we know what happened. 23, 25% each year. So if the benchmark is at 14 and you're not bringing in 45, 50, I don't think you should be trading. Good morning, Luis. Is Bank of Japan rate hikes going to destroy ETH, BTC into January? Yeah, I didn't expect the market to melt up, actually. Is Bank of Japan rate hikes going to destroy ETH into, you're looking at too short term. I think long term ETH, BTC are going to do fine. But short term into January, you're talking 2 weeks out, 3 weeks out. Look, Bank of Japan, there's a video on the channel. You can go check it out. There's one dropping today about the canary in the coal mine, which is going to talk about the potential carry trade unwind risks. And there's so much leverage in the system, anything is possible. But going forward, the carry trade is not possible any longer. But then we have trillions of dollars that were put on when Japanese rates were at zero. Japanese rates are absolutely going parabolic, interest rates. And at the same time, the Japanese government is introducing $130 billion stimulus package. I mean, how can you step on the gas and step on the brakes? And now they're about to raise rates again, officially. The market's doing it for them anyway. That's not the point. But so the differential between Japanese rates and our rates are just getting squeezed more and more and more. So going forward, that liquidity is taken out of the market. So that's a pretty big hit, actually, because the whole world was borrowing at zero and investing here. Well, that's done. But then one other bad thing is Japan is the largest treasury holder in the world, in the globe. They own about 1.2 trillion. Will if that money gets repatriated and then Japanese insurance companies, institutions, whatever, decide to take the yen back because now in their own country they can get 3.5%, right? Why should they go invest in the US for 4%? Doesn't make sense. Plus, you have all the currency risk. So that could start the unwind. And the Japanese institutions own trillions of dollars in assets. It's not just bonds. a lot of stocks, right? And so when one domino falls, we'll see how fast the dominoes fall if the carry trade unwind happens. We'll have to wait and see on that one. But you will be able to tell. Funk says things are looking very bearish. Tech is all-time highs. Crypto get destroyed in November. Crypto did not get destroyed. I mean, look, it's down 30%. Okay, if you call that destroyed. You know, crypto has a history of going a lot further than people think it's going to go up or down. Could get destroyed even more as tech goes down. I don't see too much of a correlation because that correlation has left the building a while ago. If you look at, there's a pretty decent correlation actually between the triple Qs and Bitcoin. Bitcoin is completely underperforming, and while triple Qs are only 2-3% from their highs. Now, the gap has widened to the point that, well, what's going to happen? Are the triple Qs going to go catch up to the sell-off on Bitcoin? If that happens, God help all the high beta holders. Or triple Q is going to hold up, and then Bitcoin or Ethereum are going to come back to that level because the correlation is super wide now, or the correlation has ended. But all this years, right, 3, 4, 5, 6 years, there was a really, really strong correlation. The other thing that I see the correlation is kind of not there anymore is the correlation between M2, right, global M2 and US M2, which is the money supply, versus Bitcoin and Ethereum. Well, look at the Bitcoin charts. That's why the headline today of the live stream is are we working here our way into a bottom here, basing actions? Because a lot of people after that last rally in Bitcoin and Ethereum said, yeah, the bottom is here, V bottom, we're going higher. We're not going anywhere. We're going to chop around here. But if this is a leg that we're going to take a leg down from, yeah, Bitcoin is going to 75 and Ethereum is going to probably 2000, 2300, 2200. So where will BMNR be? Where will BMNU be? We all know about that story, right? So look, I'm treading waters nicely and slowly, and I don't know. Nobody knows, but we'll see. We'll see what's going to happen. But yeah, the correlations are kind of breaking all over the place. I mean, if you look at the M2 versus Bitcoin or crypto correlation, there was a very strong correlation. M2 actually still globally in the US are still making new highs. But Bitcoin and Ethereum are not following. The stock market is kind of 2% from the high. It's kind of keeping that correlation, but the correlation between crypto and triple Q and correlation between crypto and M2 seems like it has broken actually. Walmart dividend got announced with the pay date. Yeah, if you're in Walmart, and that's the other thing, right? I mean, I did a members live yesterday, talked to my members about my plans going to 2026. Walmart is in the 52 weeks, making almost a 52-week high, while like if you look at the retailer like Target, right, it's dead. So even within the same group, 52-week, and I have a video coming out on that on Monday, and for the general public, you guys will understand what my plans are for 2026. I'm not taking any chances. I have a goal for 2026, which I have to hit. Okay, I found it interesting. YouTube's going to offer YouTube creators. I have no idea. I don't call myself a creator. Year to date, my portfolio has a 20% return so far. Okay, cool. Are you a trader or are you an investor? If you're a trader, you're not doing well. You should be at 40, 50%. But if you just buy and hold 20%, you're beating the market. Congrats. What else is there? I mean, 20% is an amazing return. You guys have to, a little shameless plug for my website. Go check out my website. There was an article. I have a free newsletter on the website, by the way. Go, subscribe to it. It's free. I'm not asking for anything, just your email. It drops in your mailbox every Monday at noon. It's a new website. It's a couple of months old, but there's about 11, 12 really great articles. It's short reads. If you're getting 20%, one of the articles is about the rule of 72. Well, if you're getting 20%, you're going to double your money. 72 divided by 20 is about 3.5 years. Every 3.5 years, you're going to double your money. And then power compounding, there's great articles in there because I want to improve financial literacy in this country every which way possible, because financial literacy is in the toilet when it comes to the US. Everyone from elementary school kids all the way to college graduates. And yeah, please go subscribe to the newsletter. Investor, yeah, okay, you've done well. You've done well. You kept your powder dry, 20%. Congrats. Like I said, rule of 72, right? Look, man, DCAing works. Passive investing works. A lot of people want to trade, do this, be active, this and that. It's very difficult to beat the markets. How many hedge funds beat the markets? A handful out of thousands. How many mutual funds beat the markets? A handful out of 5,000, 6,000. So, and these are people who have studied this, MBAs and PhDs, and have the best software and best, analysts and all that stuff, right? Best quant analysts and data and all that stuff. Well, how come they can't beat the market? Beating the market is not easy, okay? Unless you're in an NVIDIA or something like that, or Palantir or whatever, right? Okay, you'll beat the market, but it's not that easy. Is QE enough? No. Well, QE is like they announced 40 billion a month. The QE light, no, the Japanese yen carry unwind is into trillions of dollars, trillions, because they levered it anyway. When it was zero, they went and borrowed at zero, invested here at 4, 5, 6, or in stocks at 20 in some cases, and levered it 5, 6, 8, 10 times. That's into the trillions of dollars. Japan institutions and the government, Japanese government owns all 50% of their bonds, by the way. So, Japanese government and institutions like insurance companies and pension plans and things like that from Japan have come and invested in the U.S. heavily, just like the rest of the globe, because we're the best show in town, best companies on the planet, right? So they, rightfully so, they've come and invested, but then they levered it up, and there's trillions of dollars in investments. It's considered that Japanese investments in the U.S. run into $3 to $5 trillion. Now, at some point, even if the carry trade doesn't happen, what if they go, okay, we want our money back because we can invest in our own country at 3%, 3.5% on a 20-year bond, 20-year JGB, 30-year JGB. They take the money out. Well, to take the money out, you have to sell stocks, right? And it runs into the trillions of dollars. Who's the buyer of last resort? Is that what the Fed is seeing? Is that why they're announcing QE light now? I don't know. We will find out. For me, the important thing is market. Market is always right. Don't argue with the market. You may have your opinions. All is right. Market, don't argue with the market. Seen so many videos on TikTok where someone is doing, fuck, bro. I haven't met one day trader that has lasted more than 6 months. I don't day trade. Look, if you can swing it, great for you. I've traded everything. I've day traded. I've done all of it. It doesn't fit my lifestyle. Doesn't fit me. You have to figure out as a trader who you are. Are you a swing trader, day trader, position trader? What are you? Who are you? Be great at one thing, because a lot of people, what they do is all these day traders, they jump from flower to flower to flower. They change their time frames. They trade a 2-minute chart, then trade a 5-minute chart. There are a few successful day traders, I'm sure, but it's glorified. It's not an easy thing to do, and a lot of people get into it and then they lose their stack. Okay, well, you'll learn. You have to pay tuition to Wall Street somehow. All happening on a live stream. I'm not sure what that means, but I guess it is. So let's go to positions and charts. Let's see what's going on. What kind of bloodletting we're experiencing. Yeah, it's not too bad. Yeah, I think I will be buying some puts probably today. In fact, I may be buying them now. Maybe some put debit spreads. All right, so what's going on? So we sold off hard, obviously, and then this is the SPX. And I actually bought it. There was a bullish divergence on the 2-minute chart. See, we're talking chopsticks and day trading now. I bought some call debit spread, 68.40, 68.50 call debit spread. Actually, we just got to 68.50, which is MVC for today, and I think that's the top. But we're at VWAP, so I will be buying some. Maybe for next Friday, I'll buy some put. I don't think we're going much higher than this. Not for today, and we'll probably get a sell-off. This is the 1-year 1-day on SPX. We've been basically going sideways. I mean, are we rolling over? Are we topping out here? MACD is still okay, but again, chopsticks are chopsticks. They only tell you what happened in the past. They don't tell you what happens in the future. So we're definitely into resistance here. you know. So we 68, 68, 68.10 was support on SPX. We got there, we held. I traded it, made a little bit of lunch money, depending what kind of lunch you're looking at. But I think I may just start dabbling into some going out to maybe next Friday. Let's see what they're priced at. Let's see. So we're at 68.50, let's say. I want to go lower. I think we're going to get down to probably 67.30, which is where the 50 EMA is, in 67.25 range. So maybe we'll go 67.50, 67.25, put debit spread for next Friday. 67.50. So we're buying the 67.50, selling the 67.25. So that's a put debit spread. $4. I'll take it. I'll take 5 of those. 390. Okay. So that's 5 for 1. Yeah, I'll take that. I'll buy 5 at $4. Maybe 385. All right, we'll put it in at 385. 385 it is. So that's the call debit spread that I traded in the morning. I bought them at 180. They're up to they're up to 6 almost. We're at 68.08, and then I bought the 68.50 call debit spread. And it worked out beautifully. I didn't make all of it. I made some of it. What did we put this in at? 380? 385? Okay. Where are we at though? 1960, 15. Yeah, we're at 4. Yeah, I'll buy some at 4. I'll raise it to 4. 4 is fine to start. I'll buy 10 more if we go lower. Okay. Change it to 4. Yeah, 4 is right in there. 4 is fine. If we do get a bounce, 4 is fine. So positions, same thing, same positions. Nothing has changed really. I was happy to get called away on BMNU. No, we're down to 9, but I have 8, 9, 10, 11 calls, cover calls. I have some 8 puts. I want to buy some more shares. We'll see where it ends up. Yeah, we just did the put. Let's call it vertical. So it's going out the next Friday. We paid $4 for it. 4 to make 25. We'll see. So I'm betting on a little bit more of a whoosh. I think we're going to get stuck here. And if we don't get stuck, we'll take our loss and we'll leave. So we bought it at 4. Bought it right into resistance, so it's good. Okay, we'll buy some more if we get up to, let's see, 68.55, 68.60 range. And we'll see. This is our next Friday, folks. Okay. Yeah. If we do break 6,800, I think we're going to get a really quick push down to about 67.30 range, which is where the 50 EMA is at, right there. Where is the 50 EMA? 50 EMA is 67.45. We're fine. Yeah. Yep. And if you go higher, the max we can lose is 4. The max we can make is 25 on this. Going out the next Friday. So if we get a 2% sell-off, these will at least double, if not more. But we'll see. But I'm long. It's almost like a hedge for the rest of the stuff anyway. So I'll buy 5 more at maybe 3.5, and that'll hedge the account. And if we do go higher, I have enough stocks and option positions that are going to go much higher than the put amount that I'm putting in anyway. So let's see where we are. Yeah, we'll do somewhere about 3.5, or maybe wait until Monday. If we get a pop, we'll add to it. So the positions are BMNU. I'm long 3,500 shares. Average cost 778. Stock is 9. I have 8, 9, 10, 11 calls put out at decent numbers for next Friday. So I sold 8 calls at $1.20. I sold 9 calls at 95 cents. I sold 10 calls at 70 cents. And I sold 11 calls at $1.20. So that's it. We're taking the money. Cost $7.75. I sold some 8 puts at 45 cents. I don't mind getting assigned another 500 shares at 7. But then, depending on what it does next week, I'll sell some more puts for next Friday weeklies, and then we'll see where the position ends up. I mean, this is the deal with cover calls. 2 days ago, stock is 1250. My average cost 775. 3,500 shares. That's 5 points. That's 20 grand. If I didn't have this, that's why I don't like cover calls, folks, because it kind of ties you up. But it also, if you're going to keep something for a month or two, then it kind of makes sense, especially on these low end numbers. But telling cover calls on Meta or Nvidia or whatever, it doesn't make sense because it's not going to protect you, because those things are going to get hammered if we do go down another 4 or 5% here. So other than that, I'm long 5,000 shares of BZAI, 243 calls. I've sold the 3 calls. They're going to expire next Friday as well. Stock's 236, almost back to even. I'm long. I was long 150, took profits. I'm still long 75. NEO, $5, January 5 calls. I sold weekly 5.5s against it 2 times in a row. So they're 46 cents. My cost 35 cents. I'm about 30% on that. SBET, I'm eating in on this. I'm long 220. January 15 calls, but I've been selling weekly calls every week. So I sold some more, took in 2, 3, 4, 5 cents every time. So lowering cost basis there. And just put on the put debit spread for next Friday. And yeah, 68.45, 60 and 68.55 I'll add to the put debit spread going out to next Friday. And ASST, I have leaps. I have 450 leaps going out. In fact, yeah, I'm not going to buy anymore. I think long-term Bitcoin is going to be fine, especially next year after government takes over the Fed. White House and Fed are going to be the same. Long story short, we'll see what happens with Bitcoin. Yeah, I mean, I expect maybe a little nastiness in January, February, and then I think they have to turn the faucets on and get the economy humming if they're going to win the elections, midterm, or if they're going to not lose the midterms. How about that? They lose the midterms. What do they call those presidents? That lame duck, dead duck, whatever. Yeah. Yeah, those are the positions. So I have a video coming out on Monday, talks about money management and risk management. Please go check it out and share it. I think you'll benefit greatly from it. And I have a plan for next year already, which I discussed with my members yesterday. Yeah, anyway, I'm going to trade off of the 52-week high list, buy high, sell higher. I do not believe buying low, selling high, unless you're long-term investor. That's a different story. But for trading purposes, I'm basically going to use the 52-week new high list. I set up one already. This is my 52-week new high list. And look how many stocks there are, right? Okay, so my point is set up a 52-week high list. These stocks are going up for a reason. And there are some stocks in here that I would not have bet on that they would be on this list. Conversely, there's also a 52-week low list. And if you want to short things to benefit, and these are 52-week lows. All these stocks are making 52-week lows. Markets, look how many stocks there are, right? About 40, 50 stocks already, with the market only down 2% from the highs, and I see Costco in there. So my point in all of this is don't get nailed. And then, it's not a stock market, it's a market of stocks. It's what stocks you own, unless you're strictly investing in indexes, right? But even on the worst markets, like today, market's down on its ass, right? How many stocks do we have making 52-week highs? Look at it. It's a lot. So, and then I'll show some examples of that, and you guys will understand. Like, okay, let's say Alcoa is in there, Analog Devices in there, American Eagle Outfitters is in there. There are a lot of stocks, but there are some stocks that I would not have bet on. A lot of financial stocks because rates are getting pushed down. Financial stocks do well. Goldman, Citicorp, B of A. Well, you know, a lot of the banks are in there. And look how many stocks there are, right? Why do you guys have to trade the same goddamn 10 stocks because some influencer on X is pushing it? Why do I have to all trade Nvidia and HIMS and, you know, Palantir and whatever? Why? There's no other stocks? You know, there's tons of other stocks. There's 10,000 stocks, folks. Go find winners. How do you find winners? Set some scanners and then go find yourself a 52-week high list. In fact, I'll go through some charts and then show you guys what I'm talking about here, right? Okay, let's do that. Let's go to some charts. FYI, this is SPX, 1 year, 1 day. I mean, you know, we're literally at ATH, right? I just bought some put debit spreads going out the next Friday. Are we going to get it? I don't know. We'll find out. I'll add to it if we do get a little bit more of a pop. I think 6,800 is key. If we take out 6,800, we're going down at least another 2-3%. So that's what my chopsticks are telling me. But talking about the 52-week high list, okay, I would not have bet that 3-4 stocks, especially like some airline stocks, Ryanair is in there. You wouldn't have bet on that, would you? And then my goal is to buy high, sell higher, especially with short-term trading. Long-term investing is a different story. So let me go right through quickly my investment port. I have 4 stocks. I'm looking to add 5, and I decided it could be Netflix, but it's not there yet. I'm waiting for about 85. So Google is in my long-term port. I bought it at 152 during April debacle. I mean, and then I have just sold actually a week ago. I sold going out to May because I bought it on April 20th last year. I want to have long-term capital gains tax rates on this, and that's 1 year and 1 day. So if I do get called away next May, I took in $26 for the May 350 calls, paid 152, 375 sale, more than 170%. I'll take it. I had traded. So the next one is Lululemon, and if you've been following me, I put this out all the time. Lululemon, I bought the shares. Earnings came out, they were good. I'm up on that position. I bought UPS about 10 days ago, about 95. We're at 100, so that's going to be slow and steady, but I'm in the game. And last but not least, Kava. So pretty diversified portfolio. I'm looking to add one more. And Kava, I'm underwater by about 7% at the moment. My average cost is about 59, 58, 59. And, you know, these are all in the long-term port. I'm going to hold it. Netflix, I'm looking to buy about 85. In fact, I may change my mind, go to Costco, but Netflix, clear downtrend. Costco is in definite clear downtrend and into support here, I think. Where are we? 874? No, I don't think it's there yet. So let's go through some of these 52-week high lists that I just saw, right? So a lot of bank stocks are in there, such as Goldman, right? New all-time high. You just got to go with 52-week high lists. I mean, if you look at Goldman, does it even look like market had a sell-off, right? And the surprising thing to me was that in that list, we had a lot of mid-tier, where average American shops, right? Okay, Dollar General was in there, for example. I would not have bet Dollar General would be in there. Dollar Tree was in there, and you know, we're saying Middle America is suffering, right? Well, why are these stocks making 52-week highs? Believe it or not, a brick and mortar Macy's was in there. Look at this. If you look at, all I'm trying to find with the 52-week high list is I'm trying to find uptrends. And I don't want to buy the low. I don't want to sell the high. I just want to get the middle. And I mean, if you look at that, it's green today. You wouldn't even feel that the market, you know, Nasdaq is down 400 or SPX is down 1.5%. You wouldn't even 1%. You wouldn't even feel it. The point is these outperform. Okay, so find outperforming stocks, and they're going to be in the 52-week high list. So my goal for next year is going to be just trade off of these. So there's few stocks that I already added to my watch list. One is Lemonade. I'm about to make a 52-week high, so I'll grab that. I like PATH, PATH. None of this is trading financial advice, by the way. That made a 52-week high. Great earnings. Pulling back a little bit. Hopefully we'll get it down to 16.5, and I'll grab some shares. Fastly is another one. You know, that we're coming into a buy zone here, about $10 range. And let's talk a little bit, you know, again, going back to the 52-week high list, you know, slow and steady wins the race, and I just want to grab. I don't want too much excitement, you know. Yes, you can trade Palantir and it'll move 10 points a day. Yeah, we did that a little bit for 2025, and it didn't get us to anywhere. So Hood, obviously, and I will not just trade the 52-week high list. I will trade a hybrid list of stocks, you know, but I will be patiently waiting for them to get to where I want to get to. I want to get in, as opposed to just be a jockey and get out, get out, right? So Hood, I will be a buyer, hopefully around 100 if it gets there. SoFi, I'll be a buyer. If we get to 200 EMA, which is about 22.5, 23 range, it gives you a chance to buy where you want to buy these things, as opposed to being forced to buy, because a lot of people have a narrow view of how many stocks are there in their universe. I don't want that. I want as many as possible. And even in the worst bear markets, the 52-week high list will make you a ton of money. What that will show is it will show you rotation. It will show you where the money is going. So on the 52-week high list, there's a lot of retailers, for shockingly, some airlines, a ton of biotechs, some healthcare stocks, a lot of financial stocks, right? So it gives you the rotation, because money doesn't sleep. Money is going to go somewhere. Why not trade with the big boys? Because the rotation, institutional money is going to those stocks. That's why it's making 52-week high list. And I could not care less about what they do. It's more of a purely technical kind of a trading bias I will have for next year. And yeah, I mean, you can still trade the same damn stocks you've been trading for the last forever, whatever. A lot of people are stuck on NVIDIA, Mac 10, and this and that. I'm like, okay, fine. They're the most liquid. But what has NVIDIA done? It's done nothing. It's been the same price for 6 months now. Okay. So I don't want to deal with that. What I want to deal is I want to make some money. I want to put some synthetics on, take some directional bets. Because that's how you're going to beat the benchmark by 3, 4, 5x. If you don't do that, you're not going to get there. And here's the debacle, right? Here's Oracle. I mean, right? Well, 345 down to 185. That's almost a 50% haircut. Meta, I don't think Meta had a range like that today. So I think that bar is wrong. But, I like Google, as I said. My long-term port's fine. I'm looking at some stocks to buy when they get to my range, and definitely trade the 52-week high list. I mean, Citicorp is in there. I mean, out of one stock that blew my mind, the GM was in there. I mean, look at that thing. They're making a 52-week high today. Again, GM, folks. While a lot of people just look at Tesla. Okay, will I trade Tesla? Absolutely, yeah. In fact, Tesla is green today. So when Tesla gets to a 52-week high, I will get on it. I will not do it before. And I will probably trade the TSLL, right? So all I'm saying to you folks is that have a plan, execute the plan, and stick to it. I think for next year, that's what I'm going to do. Again, none of this is trading financial advice. What I do is risky. Don't follow me. But yeah, that's what my goal is. My goal is strong money management, and not give a rat's ass about win rate, because a lot of people are misguided. Another video coming out next week is about the win rate. I just want a 50% win rate. That's all I want. Can I achieve that with the 52-week high list? I think I can. And that's the plan. But what I want to do is I want to manage money really aggressively. I don't want to hold bags. I want to take profits, and I want to take L's. Much, not quantity of L's, but dollar size of the L, right? If you manage properly, have a 50% win rate, you can double your account. No question about it. Gold is new all-time high, almost. NUGT, a lot of gold stocks are in that 52-week high list, by the way. I mean, it's NUGT, that's the gold miner, 2x ETF. Alcoa was in there. I mean, why can't you guys trade Alcoa instead of you have to trade Nvidia? There's a 52-week high list. Have I shown you guys a downtrend yet? They're all uptrends, right? Okay, we want to trend up. We want to trade uptrends regardless of what the market is doing. Now, today there are about 150 stocks on the 52-week high list. Okay, market tanks. How many stocks are going to be there? On the worst days, probably 30, 40, but still be making 52-week high lists. Rotate into those because those are going to outperform. What's going to happen is on severe down days, those stocks will be unchanged. As soon as the market bottoms, indexes, these will go green fast. That's outperforming versus underperforming. Or you could choose to be in a Netflix, okay? And lower lows, lower highs. Look how different that looks. Why is that not in the 52-week high list? In fact, that's getting close to 52-week low list. All I'm saying to you guys, even within the group, within the same group, 52-week high list will save your ass. You could be in Target, for example, right? What's Target doing? Dead money, nothing. Oh, look at Walmart, same damn business, different management, about to make 52-week high, right? Same group, you know, Elf Beauty, right? They sell makeup on its ass. Oh, let's look at Estee Lauder, same group. Oh, 52-week high. Look at Ulta, 52-week high. Why? Same group. They should all be sold, right? No, he will pick the stocks that institutions are liking, money is flowing into, and where money is flowing out of. So that's it. I mean, I'm not trying to simplify things, but then you guys have to have a plan for 2026. If you whatever you did in 20, you know, if you YOLO'd and you got burned or whatever, you traded beyond and open, like open actually, I'm waiting for it to break out. I will definitely trade open. You know, I don't draw lines on my charts too much, but that's a valid channel. So once we break out of that channel, I will definitely trade open. I will trade all the other ones. Affirm I like. It's kind of going sideways here. You know, we can trade 2x ETF or whatever. So it's going to be a hybrid. It's going to be patiently waiting for stocks to get to where I want to buy, as opposed to being forced to buy, as opposed to anything else. And 52-week high list will feed you a lot of good ideas, and just stick to them and money manage aggressively. And last but not least, if you say, Serge, what if it's the top tick that I buy? Well, then you got to be the most unluckiest goddamn person on the planet. Because, for example, if you traded, I don't know, if you traded Walmart from the 52-week high list, you know, let's just go with Walmart, right? Walmart made a 52-week high recently, about 10 days ago, 10 trading days ago, about 110. Stock is 116. If you bought the top tick, you get nailed. Money manage. Get out with a small loss. Live for another day. Look to enter again on the next 52-week high list. And, you know, that's why I'm not trading Tesla now. A lot of people are anticipating a breakout, potentially, possibly. But what if it doesn't? What if we hit a snag at 470 and then roll back down to 400? I don't want to get stuck. When 52-week high happens, money flows in, breakouts happen, go with the breakout. Go trade for a few days, a week, 10 days, 2 weeks, whatever. Sell your puts, buy your calls, whatever you're going to do, and make your money and say sayonara. Again, I'm not trying to simplify things, but I think it's much less stressful doing it this way, as opposed to trying to pick bottoms, because with these high flyers like IREN, I mean, stock is down 50%, close to 40%. If the market sells off another 10%, where is IREN going to be? So I'll wait until it gets to 200 EMA, because in most cases, 200 EMA will hold, such as ASTS, 200 EMA held. It just came and tagged it, and that was it. Rigetti, right? Stock goes from 58 to 20, comes tags to 200 EMA. It held so far. All I'm saying to you is that, but that took that 58 to 20 swoosh, right? Took about 30 trading days. Well, I don't want to get involved. I'll just wait. But then in the meantime, you pick some gems out of the 52-week high list, go with the groups that are in favor, make your money. And then if you see these, yeah, a hybrid formula is fine. But don't get sucked into these, folks, because just the stock, you know, is down 10, 20, 30% from its all-time high, doesn't mean it's a bargain. It can be down 50%, 60%, which in this case it was. It went from 58 to 20. There are a lot of these stocks. You know, Oklo is another one, right? Stock was from 193 down to 80 in a month and a half. and then kisses the, tags the 200 EMA. Now it's rolling over and doing it again. Last but not least, let's talk about crypto a little bit. This is the Ethereum ETF. So we came up, we broke the 200 EMA to the downside. This is a downtrend, folks. Any way you put it, you can't sugarcoat this thing, okay? And BMNU, BMNR is going to follow this. A lot of people think BMNR is just going to go by itself. It's not going anywhere. If Ethereum goes down, BMNR is going down. Done. End of conversation. If BMNR goes down, BMNU is going to go down. End of conversation. Now, technically speaking, chopsticks talk. We based about 20. We bottomed about 20. This is the ETHA. This is the iShares Ethereum Trust. This is the ETF, most liquid one. And it coincides with Ethereum prices, obviously. So if you look at this, a retest of 20, 21 is possibility here. And if we do break that, look out below. So all I'm saying is, we sold off, had a mean reversion rally up to the 50 EMA, 200 EMA. We got stuck. We're rolled over now. Now, are we going to hold 20, 21 if we retest it? If we retest 21, where is ETHA? Where is BMNR going to be? Probably back to 25. That's it. Simple. Let's not argue, right? And this is IBIT, which is the iShares Bitcoin ETF, the most active one. Same thing, same chart. If you look at the Bitcoin chart, by the way, is going to exactly mirror this. Okay, we bottomed at about 47, had a rally to 54. Okay, we're rolling over. And this one didn't even get up to the 200 EMA. That's weaker than Ethereum, actually, right? So where is MSTR going to be if this retests? Yeah, probably 165. A lot of people go, MSTR. I'm like, what about MSTR? It's in a downtrend. Can we pick and choose and do some stuff with it? Yeah. Again, until it's proven otherwise, I don't want to be bearer of bad news, but this is a downtrend, folks. You can, all the ex-furus, we bottom here, it's going to happen, nobody knows. None of those idiots know. They don't know anything. They have some opinions. I have opinions. Opinions are not facts. Fact is the price today. 51.17. Done. Let's move on. So we'll see. We'll see what happens. I'm still DCAing Bitcoin every Monday, which I will DCA some more on Monday coming up. Other than that, I'm not trading it. I'm trading this proxies, SBETs and BMNR, BMNU, and I'm trading those, but I'm not trading the physical, Ethereum or Bitcoin. So, look, there's trading, and that's what I do. So yeah, I think that's about it. If you guys have to answer some questions, and then we'll have a cup of coffee. Let's see. I wonder what Inverse Kramer will say today. I don't know, because he blocked me. So I don't know what he was going to say. He blocked me on Twitter. I have no idea. David, that's why bearish with a PDS for SPX next. Any catalyst? No, just pure technical stuff. We cracked 68.05, bounced 68.50. That's where all the VWAP is. Just looking, just technical. Chopsticks, buddy. Okay. That's it. A retest of 50 EMA potentially at 67.40. We're talking 2-3% sell-off from the top. We're not looking for much. What makes me bearish? I'm not bearish. I'm just hedging a little bit. I'm not bearish. If I was bearish, I would just buy the puts, or I would just short the futures. I'm not bearish. I can't be bearish. Market's only 2% from all-time high. Once we start rolling over, then you can press. But buying puts here could be futile, which it may be, but I only bought 5 of them, and then I'll add to it again a little bit. But I think this is where we stop for the day. And we'll see what happens on Monday next week. I don't know. Nobody knows. By just purely looking at charts, it looks like we're rolling over a little bit here. That's it. Nothing more, nothing less. You know, hedge existing positions a little bit. It's not going to be pure hedge, obviously. But I mean, I'm covered pretty much every which way I could be covered. But the downside comes, it's going to come. I can't help it. But I'm not purely bearish. If I was bearish, I would just be short futures or long puts on indexes and then not have any long positions whatsoever. You know, if you look at the balance of it, I'm still probably like, I still have 70% cash. You know, the rest is long options or stocks or cover calls or whatever I'm in. And now maybe 1% got introduced into put debit spreads. Nothing more than that. If I was bearish, I wouldn't be long anything. I'd be just either short long puts or short futures. You will know if I was bearish. You can't be bearish. You can't be. I mean, a lot of people go like, "Oh, this is what's going on." How can I be bearish with that chart? I mean, we're and on Bitcoin, Ethereum, they look bearish for sure. They're definitely established downtrend. But how can I be bearish with the SPX or triple Q chart? This is the triple Q. To look like we're rolling over? Potentially. Could we retest the lower Bollinger Band? Potentially. Could we go below the 50 EMA? Potentially, but I don't know. I'm not bearish. I'm just trying to maybe protect myself a little bit because the longs will suffer. So we're at the 20 EMA. If we close below 20 EMA on SPX, we'll probably visit definitely 67.44, which is 50 EMA. SMA is a little lower, and we can go retest these lows right here, 65.40. Again, even that way, you know, 5% from top. I don't think it's a calamity. Now, I'll be really bearish if we go down to 200 EMA, can't hold it and crack that, then I think I will accelerate to the downside. Because this grinding higher thing usually don't end well. But, you know, we're struggling here. We can tell. Is this a distribution pattern, building the top? We're all going to find out together, hopefully. Yeah, I'm not bearish. I'm just trying to protect. If the market bottoms here goes higher, then all my longs are going to benefit from it, and there'll be a lot more than the potential loss I can incur with the PDS. That's all there is to it. I'm not looking at anything else. Again, if I was bearish, you would know. Yeah. All right, we're up $375 more on the put debit spread that we just bought. Maybe I should take it, huh? $400 now. I should take it because I think I made like $700 in the morning. There's my day trading Sergio hat on. We'll see. Anyway, we'll see how things go, folks. Fridays usually, if they close it on our ass, you know, Monday open, may not be fun, but we'll see. All right. If any other questions, I'm going to go have a cup of coffee. Much love. Have a great weekend. Red hat is on. I'm working on a red hat, green hat, black hat situation. But not extra sauce hat. You know, maybe I'll put my logo on it. I don't know. So red hat, black hat. So red hat for down days, green hat for up days. The days I do the live stream, I mean. I think it makes sense. So, yeah, that's where we are. So, please subscribe to the channel and share. Put a thumbs up. My YouTube manager said it helps. Please go subscribe to the free newsletter on the website, www. In fact, let me just put that up. You will get a free newsletter, 4 or 5 minute read, not more than that. I don't want too much attention span. That's the website. I think I spelled it correctly. There's a free newsletter. Just click on subscribe. All I want is your email. No, I'm not selling you anything. I'm not doing any of that. I don't have a Discord, and you know, it's not that. I want to improve financial literacy. Maybe you can help me with that adventure of mine, because there are some already really, really good articles in there. You know, power of compounding, rule of 72. You know, fractional shares. There's a lot of people make investment investing too complicated, which I could, but for the novice, it's a boring topic, right? I mean, you'd rather flip TikTok and watch some stupid stuff, maybe. All I'm saying is pay attention to investing. Start investing, especially if you're younger. You know, power of compounding is undeniable. And well, anyway, so I'll talk about my next year plans coming up. My trading is going to change quite a bit from this year. I'm still up 42% for the year, which is garbage. This is my long-term port speeding my trading account. I'm basically spinning my wheels, doing not much. But next year, no, we're gonna change the strategy a little bit. Yeah, we're gonna stick with uptrends. We're not gonna care too much about what the market does, because there are stocks that do go up even on the worst bear markets. You gotta understand that if you've been involved in the year 2000, 2008, all these massive drawdowns, there were stocks making all-time highs for 52-week highs, even in those markets. And yeah, there were a lot more making 52-week lows. There's no doubt about it. But most people cannot short. Most people, don't know how to short, or they don't like shorting. Well, Robinhood introduced shorting. Maybe their timing is pretty good, right? Why did they introduce shorting now? Now maybe all these YOLOers will learn how to short and make money on the downside as well. There's a potential of that, because I'm going to end with this. Market walks up the stairs, takes the express elevator down. Don't ever forget that. And again, I'm not bearish. I'm just trading what I see. So with that said, have a great weekend, everyone. I will see you guys on Monday, 10 a.m. Pacific, 1 p.m. Eastern, trading with Sergio. And I am